Hey guys, welcome back to a brand new video. This is a really special one because I got the opportunity to finally interview the CEO of CleanSpark, Zachary Bradford. Believe it or not, he's never been on the YouTube channel. I'm going to make this really simple and easy for you. If you're new here or returning and not yet subscribed, hit the subscribe button down below. Also, I believe CleanSpark is more than 500% undervalued from current levels. That's my opinion. That's not Zach's opinion. That is my personal opinion. If you want to know why, click the eye in the top right-hand corner. Also, a few months ago, I took a visit to CleanSpark's mining campuses in Georgia, and I uploaded a video of my tour there. If you'd like to see the inside and how this whole Bitcoin mining thing works at CleanSpark's facilities, click that eye in the top right-hand corner. But with that, I hope you guys really enjoy this. All right, everybody, excellent. I'm here with a very special guest. Believe it or not, the first time he's ever been on the channel, and I've been covering CleanSpark for like over 3 years now. I think I'm the longest-standing CleanSpark YouTuber, if that says anything. And somehow Zachary Bradford's never been on the channel. He's the chief executive officer of the company. I've met him several times in person, but it's beyond time he gets on the channel. So why don't you go ahead and introduce yourself, Zach?
Hey, thanks for having me. First off, it has been a minute. Last time I saw you, I think, was in person at our facility, and then I think again at the conference. So thanks for having me today. I think your users or your listeners probably do know who I am, but yeah, I'm the CEO and president of CleanSpark.
Yeah, I would hope they know who you are too. That'd be bad if they didn't. So let's just go ahead and talk about your most recent expansion, the Dalton facilities. Did those facilities come with miners? Was it a Bitcoin mining facility? These facilities that you bought?
Yeah, they were operating Bitcoin mining facilities. But when we purchased, we didn't purchase the miners inside.
Okay, that was going to be my next question. Okay, so are all those old miners already out of there, or is that still kind of in the process of happening?
No, yeah, actually, at the time of closing, they were required to have everything moved out.
Oh, okay.
So, yep, we didn't acquire those miners because they didn't meet our efficiency standards.
Yeah.
And so we're actually bringing in brand new, the Pro Pluses and the XPs. And we're basically taking the facility and splitting it down the middle with XPs and the Pro Pluses. The Pro Pluses, because we had them on hand and ready to go. And the XPs, if you notice, we ordered XPs a few weeks earlier in June. And at the time we ordered them, we technically didn't have shelves to put them on. That's where they're going. So there's actually a truck arriving today with XPs to start loading things up.
Oh, that's really cool. So you guys evidently really like Georgia.
That we do. We find it's a great place to do business. Love the power we get out of there. Obviously heavy nuclear, but also, it's market-based, but market-based in a way that we like and keeps the cost low.
Yeah. So speaking of me visiting your facilities, I mean, it was really eye-opening. I mean, state-of-the-art facilities. And most of what I saw there was the immersion cooling. And you guys talked about all the efficiencies behind immersion cooling and why immersion cooling makes sense. And I guess my question is, moving forward as a Bitcoin mining company, do you see immersion cooling either becoming or at some point being the majority of your Bitcoin mining business and the way you do it rather than air cooling, or is it just going to kind of depend on the location?
It will depend on the location and what works best. The hotter the climate, the more immersion makes sense. But on the flip side, from a longevity point of view, a post-halving point of view, really immersion is going to make more and more sense, especially leading into not just the halving in 24, but really into 28. All the benefits of immersion from, overclock, underclock control to, longevity of the miners being longer in immersion is ultimately going to matter. But obviously it costs more to build. And so it's always a balance, right? It also sometimes, rule of thumb is it takes a little longer to build the immersion cooled facility as it does the air cooled also. So what our intent is we want to have a proprietary, I'm going to call it, a stamped out footprint for immersion. that we can go into a site and we can start stamping those out. And then we already have our proprietary, air-cooled facilities, the ones we just put up in Washington, that we would go and stamp out that we're going to do in Sandersville, right? So we have a design, we just know how to do it, rinse and repeat over and over. We're in the process actually of working towards refining our design on immersion so we can start to do that more. But we're probably going to balance it, at least for the next year or so. I do expect that there's going to be a tipping point where more of our sites will be built as immersion cooling.
Okay.
Less will be built air cooled, but we haven't hit the tipping point just quite yet.
Yeah. So I remember listening to you talk. I don't remember, you've said it multiple times in the past, like going into 2022, then you've mentioned it throughout 2022, just kind of how you thought all of 2022 and 2023 was going to be a year of consolidation in the Bitcoin mining space. I mean, you have been spot on with that. So congratulations with that. My question is, do you, since you're very accurate, I'm going to put you to the fire. Do you think the consolidation is going to continue as we approach this halving event and going into 2025? Or do you think a lot of the consolidation is kind of now behind us, that Bitcoin prices have recovered quite a bit?
No, I think that it'll continue. I think there's plenty of M&A opportunities that are still out there. And there's, but it's a balance, right? The more Bitcoin recovers, the more that people are going to try and hold on to a site a little bit longer, at least, or for the long term. And but we're very bullish on the sense that there's enough opportunity to keep anybody that's hungry active in the space for M&A for the through halving, but it's really post halving.
Yeah,
we expect post halving to be similar to this Dalton site we just did. Acquire facilities without the miners, because there will be facilities that don't make it because of the miners, not because of the facility. And so, coming in, buying a site where, a 38, 40 watt per terahash machine doesn't cut it anymore post halving, but a great facility. So plan to scoop those up. There's probably going to be a lot of air cooled facilities. So that's why I say air cooled is not done. But we're getting pretty excited about Greenfield. We're going to be hitting a point where, and I know this is kind of in addition to your consolidation question, but the market's setting itself up for, we believe we'll be positioned, having been big enough, that we'll be far enough ahead of some of our peers, that we can start focusing on Greenfield that may take 6, 9, 12, 18 months to put into place. And that's where some of the immersion is going to come in. It's going to take a little longer, opportunities that don't have power today, that we can just spend our time slowly building into them. And really, that's the post-halving environment we'll be all set up for. But we felt pretty strongly, or I felt pretty strongly, that we needed to be ahead of the curve come halving in order to start lining that up. So first question, no, I think that consolidation is not done. It's just all about timing. And then second, we're still really excited about building, and what that means for consolidation. The bigger we get, the easier it is to consolidate other people.
Cool. So kind of piggybacking off of your company's strategy with efficiency, that word keeps coming up again and again and again.
Yeah.
And on my channel, I've always kind of said, when I look for a Bitcoin mining company to invest in, it's absolutely efficiency, but just below that is execution, because without execution, you don't have anything. And I'm just curious, I mean, what are your thoughts on that? Because I hear Matt Schultz always say efficiency is your 3 levers right now. But you guys have been tremendous at execution. I mean, hands down, I think probably institutions have told you the same thing. Banks have told you the same thing. The best executing management team in the space. So what are your thoughts on that? And I mean, what are you doing proactively that other companies aren't doing?
Oh, that, I think it comes down to the willingness to be bold. That's what it takes. We also, a phrase that, I used it on stage a couple weeks ago, and I'm really trying to continue to use it, which is, hope is not a plan. And I think that's the difference. We made a plan and we knew the upside and the downside, the risks around those plans. And then we went and did it while mitigating the risks to the downside. And one that takes some boldness, but again, hope is not a plan. We didn't just hope that Bitcoin would go up and it would take care of it. We didn't hope that we would have, Bitcoin would be in a place to take care of debt. We knew we needed to plan for the downside while being very bullish on Bitcoin's future. So that's how we've executed. You pair that with, a best-in-class team. I can plan and things all day long, but without a team behind me that's really building the facilities, without racking the miners and then keeping those miners up, it's not just execution on the plan, it's not just execution on the build, but our execution and operations, all of those pieces of execution go together. We could build the best facility in the world and then decide that mediocrity was acceptable and run it at 76% uptime, right? Mediocrity isn't accepted at any point in our company culture, and we have fun performing. We believe that the company should be run the same way a world-class athlete trains, builds, and then executes. And so that's really how we view the company is, treat it right in the training process, treat it right in, I'll call it the nutrition you give it, which is the facilities. And ultimately you end up with an Olympian at the end of it. And that's how we've executed on top of it. And underlying that, of course, comes in that efficiency, efficiency of the machines, efficiency in how we manage our power, and efficiency in how we manage our capital. All of those things have to blend together to make it work at the end of the day.
Gotcha. No, that's exactly what I thought you would say, and I'm glad you said it that way. I guess now I'll get into a more difficult and philosophical or theoretical question here. And I think if you've done any research at all, and I'm not talking about you because obviously you've done research into the Bitcoin mining industry, but just the audience in general. And I need to talk about this because no matter how many times you talk about dilution, it keeps coming up again and again and again. And as an investor in, CleanSpark, the company, obviously I invest in you guys because you're efficient and you execute. I've already said that. But when I weigh the bear thesis, I think every good investor does that. You guys do that with the price of Bitcoin. In a bearish scenario, what's going to happen? How are we going to prepare for this? And part of my bear thesis is I don't like Satoshi Nakamoto obviously prepared for a lot of things, but I don't know if he ever expected Bitcoin mining to be such a venture that public companies go out and perform. And the reason I'm bringing this up is because via dilution, via ATMs and all of this stuff, and no matter what environment you're in, unless we're in some sort of Great Depression, stock market overall is down 80%. Every single publicly traded Bitcoin mining company is going to find a way to be cash flow positive via dilution, which allows them to grow in a bear market or keep their miners up and running, or grow, buying more miners and buying more facilities and having more miners hosted. But in turn, that also increases the overall difficulty of mining Bitcoin. So in my mind, a bearish thesis here is that there can be, at least right now, it seems like there's a never-ending cycle of companies diluting, raising funds to be profitable, for lack of better words, cash flow positive because of dilution, buying more miners, getting them deployed, getting them operational. And then as a result of that, there's more hash rate in the network and difficulty goes up. So they have to do the same thing over and over and over again. So I guess my question is, do you think the Bitcoin halving event is going to help with this a lot when it comes to kicking players out of the network that shouldn't be there, and maybe kind of limiting the overall long-term dilution that public Bitcoin miners are going to have to undertake? I know it's a long-winded question and it's all theoretical stuff. I'm just curious what your thoughts are on that.
The best part about that question is, yes, it's a theoretical, but it's not, right? It's a reality. I think we're 276 days as of today away from the halving event, right? And if you didn't start preparing for the halving event 2.5 years ago, then that's going to be a very, very painful day. And it will absolutely wash out not only some of the players, but it will, I'm going to call it cleanse a portion of difficulty, right? So, and where Bitcoin is will really depend on what that cleanse looks like, right? Are we dropping every unit below, an S17? Are we dropping every unit below 34 watts a terahash, 38 watts a terahash? I think it could be closer to 30 at current difficulty. And so even if you went and bought all the, J Pros in the world today, you would still find yourself in, some trouble unless you had a tech stack, of course, to, help manage those and reduce efficiency and so forth. But getting back to that, it's going to be a key event. And this is why, one of the things that Satoshi Nakamoto did predict is that there would be a point in time. I don't know if he predicted the when and the how quickly, but, it would be distributed, but only highly specialized operators would do it. Now, some people took that to be, kind of come to fruition just in the ASICs, right? Now there's only a highly specific ASIC chip that does it instead of a computer itself. But I think we're looking at a consolidation of now you have to really be focused on mining. It can't be an afterthought. It can't be something you do mediocre. It has to be something you're an expert at and do. And so the experts will be the ones that live another day. And then the people that prepared far enough in advance will survive to do another day. And, that does come, of course, into buying more machines and more facilities. But I want to maybe talk about a company like us from a dilution point of view, right? So where we're at right now is, we take $1 from the market and we're looking to return $3 to $30, depending on Bitcoin price, right? Back to the market. I'm giving those as theoretical numbers, of course, but meaning it's a many multiple is what we always look at. And that becomes an accretive action instead of a dilutive action. Dilutive action really ends up being something where you get less value. That's real dilution. Accretion is where you get more than what you're putting back out in the market. We've been positioned to be able to do that, as have several other companies, right?
Right.
But what are the capital markets and how are they going to award at halving the miners that are the clear winners, right? I'm a big believer that what's, on a theoretical basis going to happen is if you're not at the very top of that stack, like top 5, let's use that. But I think inside that top 5, you're going to see capital incrementally being limited, going even down through that stack. So I've been very outspoken of we're not here to be big just to be big, but we're here to be positioned in the right place. And I think positioning at the halving event for capital markets purpose will be incredibly important, because I think that from a valuation point of view, that there will be a reward that really comes with positioning. Because if you're an institution and you are going to deploy, 1% of your fund somewhere, you're probably spread it between a few names, because 1% can be a very big number, but you're not going to spread it between 18 names. Probably you're going to pick, the top 5, the top 3, and that's where you're going to put your capital. So I think that that's a key piece in this, because then those companies will continue to get bigger and stronger, and other companies will start to get left behind from a capital markets point of view, which means their ability to actually continue to do that, buy and build becomes limited. And that limitation then further benefits the top, 3 to 5 companies, because they have to contend with less difficulty at that point. Because difficulty at this point really is a big part of that is coming from publicly traded companies who are able to build off of this. And so I think that balance and limitation is going to be kind of a natural consequence of positioning. Now, we should then head right into another bull market, and we'll get new entrants and it'll shake everything up again. But I really see the 28 halving as like make or break. You either have scale or you don't have scale.
Really?
Scale is going to
Okay.
be important in 24, but if you don't have scale in 28, you're done. I really believe that from a positioning point of view. Now, what scale means in 28 is anybody's guess, right? But
Right.
I think that you look at the risks of what happens as it cuts in half. Now, Bitcoin should offset that from its own valuation, again, on a theoretical basis, but really that's the benefit of the algorithm is scarcity, right?
Yep.
Scarcity should increase Bitcoin's value, should help some of that, but it's always going to be incremental. Bitcoin can go up 65%, but if the reward is 50 is cut in half, you're still in an imbalance there. And we are going to hit some limitations likely from a Moore's law point of view and just from a capital constraints point of view.
Right.
We're already bumping up against ASIC chips being printed. There's true competition between those chips and Apple, and everybody wants a chip of that size now. So at what point do we start to see other market events really limit how quickly efficiency gets? And also, right now you jump from, and I know I'm going long-winded on this, but I think it's important.
Yeah,
if you
absolutely.
look at changes, we jump from 44 watts a terahash to 38 watts a terahash to 34 to 30, now to 21.5, with some steps in between that from an efficiency point of view. How much does somebody really benefit once we hit 15 and the very next ASIC that costs 3 times as much as the last one? It's 12, right? So this diminishing returns concept starts to play a really big role. And I really think that we're going to see a few things log jam against each other to where positioning, market strength start to be much bigger factors than just being able to reach out and slam an XP onto a shelf.
Gotcha. No, thanks for that. That got me thinking a little bit, helps me alleviate that concern that I shared there. And speaking of Bitcoin's valuation, just a couple days ago, Cathie Wood came out and put out a price target for Bitcoin by 2030 to be $1.5 million per Bitcoin. I just want to get your take on that. Do you think she's Looney Tunes, or do you think that could be realistic?
We're talking 2030s, so we're talking 2 halvings away. It's definitely possible. I wouldn't necessarily make the same call myself, but there's so many other macro events that have to follow along. But let's just make an assumption that macro events kind of follow in a reasonable chain, of events. You're now talking about Bitcoin being, every reward and therefore the supply is now down to 25% of what it is today. And at that point, we would be 2 years away from it being cut to 12.5% of where we are today. You start to look at scarcity in a real way, and you talk about ETFs and institutions at that point should be very well established in their ability to get exposure to Bitcoin. And now that if you're an institution and you say, hey, I want to build a piece of my portfolio in Bitcoin, it just keeps getting more expensive, and in 2 years it's going to be twice as hard to get. I'd be making some moves to pull in Bitcoin, and institutions would be looking to pull in Bitcoin, not likely to trade it. They probably trade derivatives around it, not the actual Bitcoin. There's going to be Bitcoin pulled off, put on a shelf, and there's a lot less access to it. Frankly, if we get on this show in 2030, I would expect that we would be talking about sats, much more than we'd be talking about whole Bitcoin.
Yeah.
And I think that that's the reality of the future. There's a whole lot that has to happen to get to, 1.5 million in between that has to go right. But I think we're lining up, and, scarcity and institutions start to make that, pull together. And then you also have obviously nation states that want to put Bitcoin behind it because, fiat currency is on such shaky ground all around the world.
Yeah.
Even if it's a backup plan, if you have nation states start to, take a percentage into their treasuries. So yeah, I think there's a lot of upside for Bitcoin ahead of us.
Yeah. So when we talk about that, obviously that makes the case for a HODL balance. The Bitcoin reward goes down for every block you mine. That makes every Bitcoin that you add to your HODL today worth so much more potentially in the future. And that would mean the valuation of your company goes up tremendously also based on your HODL balance over the long term. discuss your HODL strategy right now. I've noticed that you've been adding to the HODL balance lately. I would guess you're going to continue to try and do that. Yeah, just discuss that a little bit.
So we've already, this is all public. We've already made meaningful additions to our HODL balance. We went from, I believe we got it right when we called it when Bitcoin was, in the 60,000. It was not popular, but we openly said we're going to sell everything. I think we were amongst the first. I'm not going to say the first. There may be somebody I wasn't paying attention to, but we were amongst the first to say we're selling it all, and we took our licks for it. But that means we sold Bitcoin at 69,000 and 55 and 50 and 40 and 45 and so on and so forth. And yes, we sold it all the way through 16, right? And then as the markets shifted, we began adding. So what it is our strategy is to look at the market today and make a prediction about tomorrow and adjust accordingly. And so we've been using the phrase for the last, year and a half, use Bitcoin to get more Bitcoin, meaning take our Bitcoin, turn them into machines, therefore we can get more out of it. That of course also limits, accretive dilution, but it still limits dilution. It limits shares that went out. And so if you look at all of that, and also the fact that we sold it, above, largely above current market prices, I think we drove a benefit to our shareholders. But you can clearly see that starting at the beginning of the year, we viewed the market differently. We felt starting really in January, which is when we started adding more to the HODL balance. Little by little, it hasn't been a big shift, but we felt that the market was shifting, and we started adding at those times so that we could get the benefit of an increased valuation. Our intention is to continue to do so, and as part of that, we're going to continue to measure the market. And when the time's right, we'll make bigger moves and smaller moves to basically add to the balance. But again, hope is not a strategy. A plan is a strategy. And when you make a plan around something that's market-based, it means pay attention. And that's what we're doing. We're paying attention and we're acting accordingly. So obviously I can't say, too much more about what's happening today, just, from what we're doing. But, I would say we're on a trajectory, and we plan for that trajectory to remain intact with building the balance.
So when you say making bigger or smaller moves to increase your HODL balance, I mean, is the possibility of actually purchasing spot Bitcoin on the table?
Oh, it could always be on the table, right? There's nothing that would preclude the company from doing that. But I look at this and I say, I can get Bitcoin by producing it for about a third, approximately, obviously, a third of what it costs to actually go out and buy it. So I'm much better served to just sell less Bitcoin. And so that's where we'll look first. And then when we get to the point where we see opportunities, I'd never rule it out, but I would never say I'm going to go do it, right? So again, it's all about market-based decisions. And frankly, we're very well positioned that I think, if you eliminate the bankrupt miner, we were the second highest producer of Bitcoin amongst the public miners last month. So it doesn't give me a big reason to go out and buy a whole bunch. Instead, it just means it gives me more reasons to hold on to more of it.
Gotcha. So obviously you've timed this out very, very well, selling Bitcoin at 60,000, like you mentioned, and all the way down. Seems like you guys have been first to a lot of different things. And I mean, freaking people, I don't know if they missed this or if they just don't care, but your CFO, Gary V, I'm not going to even try and say his last name, literally set the stock market bottom price for CleanSpark stock. What was it? On December 19th, he bought some shares for $1.78. And if you go back, that was the bottom price. And then you guys go and you set the market bottom price for all of these mining rigs. How much is, in all honesty, how much of this has been luck versus actual strategy and planning?
So I'm gonna get philosophical with you for before I answer the question. So in certain cultures, there's two types of luck, right? One is gambling luck, right? Put it on red and hope it shows up on red. The other one is business luck. And if you really look at how that's viewed, it's about preparing for the opportunity to present itself. Now, I never want to rule out, being in the right place at the right time. That's like the definition of luck, right? But if you didn't put yourself in that position, you can't be there. With that said, I'm just gonna be honest. I put a very, very small percentage of this on luck. It's all about preparation and prediction. And we've been right consistently. It doesn't mean we've been 100% right all the time, but when it that's been my focus in the last 18 months is nailing rig prices, right? And that means you got to be in it. You got to be finger on the pulse all the time. You also need to be willing to not make the purchase and wait. Even when you're like, oh man, I think we're nearing the bottom. Should we pull the trigger? Should we not? I think another 2 weeks is gonna make the difference. And then, there's also a counterparty, meaning there's a party you have to rely on the time it's going to take to put the contract together, that Bitcoin's going to not change and they're not going to change their mind on pricing. So we have been very, again, bold in how we've made the predictions, and we've also established relationships to be able to have direct conversations with manufacturers. But we've also positioning again. We've established ourselves as, frankly, the largest purchaser of miners in the public space with, Bitmain is who we're buying it from. We're an important customer for that. And if we had waited around and not bought anything for the 12 months before, and then showed up on the doorstep and said, hey, we're ready to do it, but we need the best prices, they would have said, who are you, right? So every single time we did something, it made an impact to the next time we're going to have a conversation about machines. So no, I wouldn't call it luck, but I would call it positioning. And I would think that, a good tailwind always helps being in the right place. So, to be honest, we would have conversations and I would say, this is where I want the price to be. And it means we need to wait. And, we would be 25, 50 cents off for when we wanted to make the pull the trigger. And obviously Bitcoin could have run away on us, right? But it didn't, because we didn't think it would. So again, not trying to toot my horn too much, but I guess I've got to toot it a little bit in the sense that we did it right. Mm-hmm. We made bold calls and we stuck to our guns, and that's how we got it done.
Yeah, it's a really interesting philosophical question that I've pondered too, is the hard work versus luck fallacy or whatever they call it. And I don't know, I always just boil it down to hardworking people get lucky, because like you're saying, you put yourself in that position to get lucky. If you're never there in that position, you won't get lucky. I'm not saying that this was all luck on your guys' part, because I know how hard you guys work and how much research you do and all the people you talk to. So I just want to applaud you for that. I think we'd be doing a disservice not to talk about Gary a little bit and what he's brought to the team.
Yeah.
Just from a bird's eye view, it just seems like the operation has gotten so much more efficient. No late filings. It just seems like you guys have everything finally all together. Everything you need is finally in place. So can you just talk a little bit about what Gary's brought to the team? I know I always like talking with him, and he's just a great guy.
Yeah. No, he's brought amazing things is what I can say to the team. If you go back and you look at the size of the team when we started to put this, really make the move into Bitcoin mining, and you look at the mining team and what was behind it, we were a dozen or so people. And that meant that, at the time we had a great team and people that were talented, but, sometimes you need more to get to where you need to go. Right. Mm-hmm. And he brought the more, it's not like he's super smart, knows exactly what he's doing. I go in there and, I'll be like, hey, I want to do this. And this is a strategy, and his job, and he does it very well, is great. Let's figure out how we're going to make the dollars and cents work. And he and I get along really well because I also have a background in finance, so we can speak the same language. But then he has a team behind him. And I've seen a lot of people run finance teams, and he runs a team like nobody else. So there's never a question of, can we actually get it done? Because there's this team of people that he is leading behind him that can bring everything forward to, take the ideas and the realities and the commitments that I'm out there making and actually fund and pay for them and turn it into the realities of what we built. You can't do that without a really strong financial lead and a financial team behind him. Again, the builders have to be able to, pay the contractor when the time comes, and all of that needs to come together. But something else too is, you talk about Gary and, I'm not, timing the market was what it was when he bought the stock, because we have such short windows of when we can actually buy stock.
Mm-hmm.
And so, he knew finally he got an open period and then he bought it. But like Gary trades our Bitcoin. He's the one that clicks the button. We don't have someone else on the team that does it. He does it. He's got a really good feel for what that is. When he joined the team, initially it was okay. We would talk all the time. What are we going to sell Bitcoin? What are we not going to sell Bitcoin? And I very quickly was able to develop trust, and I just knew he was hitting the best places in the market at the right times to get the best return. I don't have to worry about it. And knowing that you can trust somebody and enroll to, manage all these different pieces is huge, because that gives me that much more time to go and focus on strategy and building the company without worrying if there's going to be a problem in the rearview mirror, right? So not only is he looking ahead, but like he's got my 6 and the team 6, and like you can't replace that. So no, Gary's brought amazing things to the team to really up our game, to where we need to be. We're not too far off from $1 billion, and we've got our sights set on $1 billion market cap.
That's crazy.
And you need a really strong, financial and strategic financial lead as part of the team for that.
Gosh, I remember talking about CleanSpark several years ago. I'm getting old. Like, I can actually make an attempt at growing facial hair now. And now we're talking about almost $1 billion company. It's just, I feel like, people talk about things they've grown up with and the nostalgia of that. I feel like I've grown up with CleanSpark. It's just been a surreal experience. That was kind of a side note. And my last question, I know you got to get going to things. You're a busy guy. It has to do with people, because I've always been a believer that people are anybody's biggest and greatest asset. CleanSpark, compared to the other Bitcoin miners, I mean, that I know of, you guys have the biggest team of people, and it seems to be working out in a big, big way. So when we say, these other companies that are asset light, they're also asset light when it comes to the people. And I've just noticed this all goes back to things we've talked about already. The efficiency, the execution, it all has to do with the people. And I know you guys haven't been slowing down your hiring either. If at all, you've been accelerating the amount of people you're hiring. So yeah, maybe it'd be cool for you to give a shout out to some new hires or something that on your team that are making a big difference.
The ones I have to give a shout out to is pretty much the entire Washington team. That build was massive. And, as much as we had contractors that came in and they did the switchgear and the transformers and the buildings, our team did a pretty heavy lift on that too. And, hard work is something that you can't teach somebody. Work ethic, right? It's in you or it's not. And that team has some of the, best work ethic of anybody, and I'm going to talk about the team as a whole. And they're led by, a great person, which his name's Dell. And Dell leads that team like almost like if you combined a military camp with summer camp and a really good dad, and you mix those all together, like that's how he runs it. Super safe. Everybody's really respectful. Everybody's always on task, but like they love working together. And so that's where it's about the people. Now, what I will say, because I want to piggyback on something on the hiring side, just to kind of mention it, we've built a really efficient, I'll call it the core corporate team. So that's the finance, all the attorneys, and everybody else. Like that's a team that we're in a great spot and don't have to grow. So it gives us this huge benefit to our hiring is the techs and people that are running and operating this. And that's where we're focusing on our growth. And some people would question that, oh, do you really need this many people? Look at our uptime.
Yeah.
Look
Oh
at
my
that.
gosh. Second to none.
Is in the pudding. Yeah. And when you talk about Asslide or the hybrids and the things like that, and again, we have some hosted stuff, and we have a great host, but we minimized it, and we'll always our path forward, especially after I'm going to call it with what happened with Lancium, and when the bear market hit and a company runs out of money, if you're relying on that, you can get stuck in a bad spot.
Mm-hmm.
So we're determined to always control our destiny, and our team will always care more, I believe, about keeping a machine up and hashing than somebody else will who's getting paid a management fee or a hosting fee, right? And
Absolutely.
So really basing on that and bringing in the CleanSpark way into the culture, that's how we're getting uptime. And if it means that we have 6 other team members on a location, then it pays for itself with the uptime. We're 20 and sometimes 30% higher uptimes than some of our peers. And that's why. It's because people give a damn, right?
Yeah.
And that you can't teach that. And that's the other reason we love Georgia is, especially our rural communities, people are coming from, they worked on a farm at some point in growing up. They've done things, they've thrown hail bays or bales of hay. And so you bring that into a mine where people can get excited about the technology and about Bitcoin. So you mix that all together, and we hands down I really think, and I know I'm biased, but I think we've got the best team in the whole industry.
Well, I don't know if I am biased or not, but I would agree with that. This has been really fun. We're going to have to do this again. It was great to finally have you on the channel, Zach. I'm going to let you get going because we got some Bitcoin to mine, right?
Absolutely. Thanks again for having me. It's always fun. We'll have to do this sooner instead of waiting 3 years.
Yeah, let's not wait another 3 years.
Awesome. Well, hey, thanks a lot. Appreciate it.
Yeah, thank you.